Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hanks. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Happy Monday.
Happy Monday. I don't think it's a happy Monday for a lot of Zoom video investors at this point. Stock's down about 62% so far this year. And it just seems like, you don't hear about it that much. It doesn't seem like people are using it a lot. They still have growth, but it's really come down on a quarter-by-quarter basis over the last year and a half. What kind of data are you guys seeing out of LikeFolio?
Yeah, this is that, the whole first to market. This is the other side of it. I mean, they were first to market. They absolutely crushed it early on in COVID. They were there already. They didn't respond to the COVID lockdowns with their company. They were there already, right place, right time, and they had the first mover advantage. We saw the stock get up in the 500s or something like that. It's down 88% since then. So it's been quite the fall. And what we're seeing is that they're really running out of growth, just like you mentioned. And when you compare it to some of their peers, Microsoft Teams is off a little bit on a year-over-year basis when it comes to purchase intent. That's basically someone saying, I'm signing up for, I just joined, that kind of thing. Zoom is down tremendously, and Slack is the one that's kind of showing everybody what you should be doing. And so Slack is doing really well, owned by Salesforce CRM. And when we look at just overall all the different metrics we have for Zoom, we have a lot of different metrics for them. Purchase intent is one, happiness is another. They're actually the lowest of these three services when it comes to happiness. But even when we go into the web, those are all down. So purchases down about 37% year over year. Web visits are down 23. Recurring web visits are down 15. And then unique audience, which is actually probably the most important metric that we have, is down about 9% year over year. So what this means is how many unique users are coming to Zoom.us. Zoom's website. That actually has a 0.93 correlation to revenue. So a decrease in that is almost definitely a decrease in revenue. So we're seeing a lot of problems here from Zoom. Everything that we have basically is telling us that they're running out of new customers, and their current customers are not as enthusiastic and maybe even quitting at an increasing rate. So everything we have as trajectory is the wrong way. In fact, even if you get into some of the trends, if you look at working from home, that's down about 36% year over year. Virtual events are down about cut in half, about 50% year over year. And traveling for work is up. So all the trends that should be helping Zoom aren't. They're all going down, and all the ones that are hurting are hurting. So they're going up. So it's, now they find themselves, they were right place, right time. Now they're in the wrong place, the wrong time. So with their competition coming up, I think it's a tough outlook for Zoom right now.
Landon, the difference between a lot of these growth stocks that are getting punished by the market and Zoom that is also getting punished by the market is Zoom is profitable. Right? They've had 6 straight quarters now of making over $1 billion in revenue, as opposed to like $600 million for the year before the pandemic. You're right. There are parts of their business that have stopped growing, which is the consumer segment, right? But the enterprise segment, the big companies, that's still growing 14%. So this is a company going through a transition. It's not as popular as it was. We all know that. But this company is still growing, Landon. And here's the thing. They make money. A lot of these companies that don't make money, Tom and I cover them on a daily basis. Zoom makes money, Landon. And it's interesting, some of your data about Slack. CRM's gotten beat up because of Slack.
They pay too much.
Yeah. So the fact that that's doing better, what does that mean for CRM? Or is this just data that CRM stock doesn't show that Slack is doing so well? How do you make sense of all this? Because you're right, the numbers in Zoom aren't as big as they were, but they're still growing and they're profitable, Landon.
They are, and I tell you what, this is, you couldn't really define a better business when it comes to variable margin. The next person that signs up for Zoom is basically 99% profit. I mean, they got to pay some servers, they got to keep those up, but very high variable margin. So that's my kind of business. I love that kind of business. And just depending on where they want to go. If they want to go growth, then they're going to pay for it. They're going to continue to pay high expenses to get there. But if they ever wanted to transition into a cash cow type company, their stock would get murdered for that kind of move. But if they did, they've got the ability to have those high margins and just kind of cut back on growth a little bit. I think the problem is, though, if you're expecting this growth rate to continue to rise, it's one of those situations, we've talked about this before, it's one of those situations where if you're expecting huge growth, you're going to get that multiple on that growth. The stock price is going to reflect that, but it levers, right? You get a lot of leverage that way. But then if it ever disappoints and you're not getting that growth rate, the downside is exactly as sharp leveraged than the upside was. So I think that's the concern for Zoom, is that maybe investors aren't seeing what the path to 10x from here is, because frankly, I don't know that they can get there. I don't know if you can argue that they're going to go 5 or 10x in the next few years, because just like you're talking about, enterprise is decent, but the small guys, they're missing out on those, and competition's coming for them. So I know you guys don't love Slack as much as I do, but the data does. So. Yeah. Tom, I'd love to hear your opinion on it.
Yeah, and to that point about companies pulling back, the number of customers using Zoom that have greater than 10 employees has declined sequentially for the 4th straight quarter, Landon. So there's where it hits you, where competition's starting to pick up. Hey, I like Slack. We're transitioning away from Slack, unfortunately, as far as the use of it. But when you look at the happiness, we've got this chart up here, with the competitors. As far as happiness goes, I know you guys track that quite a bit. How does Zoom compare to Slack and Teams?
Yeah, so Zoom's about 68, Teams is 70, and Slack is 82. So it's got the happiest customers. And, frankly, I think they're all pretty good services. I'm not a big fan of Teams personally. I think it's too hard to connect to. Zoom's much easier. But, the data says that Slack is leading the way there. And incidentally, I have to look it up. I think they had a pretty strong number there. Salesforce, when it comes to Slack, their contribution of revenue was up about 46% year over year. So Salesforce, they may have paid too much, but I think that the brand itself is doing really well on a year over year basis, whereas Zoom is slowing down. I think that's really the problem, is that everyone wants this really rapid growth. You kind of got teased with it back in 2020 when it was just off to the races and the stock went up incredibly high. And I think that investors are sort of hoping that happens again, but I just don't see it in the cards. Everyone had the opportunity to become a customer of Zoom, and now you've got competition, you've got Teams, you've got others out there that you can join, and there's no real catalyst for needing to get on these services. People are not working from home as much as they used to. The virtual events are down, they're returning to work. So the need for Zoom and all of these, frankly, is declining, and their growth is declining. So long term, I don't love an investment in this company at this point.
Well, so kind of negative there on Zoom video.
What are you really thinking, Landon?
But I get it, Landon, because your data supports it as usual. Great stuff. I appreciate it, Landon. Have a great day.
All right, guys. Take care. Thank you.
All right. That's Landon Swan, co-founder of LikeFolio, breaking down Zoom video.